Okay guys, it's Tuesday the 24th of July and we are on the FTSE 100 5-minute time frame. So it's just coming up for 7:45 and the first thing to say is the sun is streaming through the office window this morning, so if there is a strong reflection coming off of me, it's definitely not a halo. We are just for once having another sunny day in Scotland. This has probably been the best summer that we have had in recent memory. Now, it's Tuesday. What I always do is I record the first trade that I take each week. Now, yesterday on the FTSE, we had some very nice price action. Let me actually go back and we can have a look. So what I'm going to do is we'll quickly look at yesterday's price action and then I'll come back and we'll start talking about the way the market is sort of setting up today and what I am looking at. And also go over why I'm using slightly reduced risk and a slightly larger stop coming into the trade today. So yesterday's price action, we had the market dipping down coming into the open, then we had a very strong bullish bounce. So the strong bullish bounce down here, I wasn't really looking for it. I sort of came into the trading day and my preference was to look for some sort of weakness. Now we got the nice rally coming into the FTSE and then in toward the sort of close of the market, we got that nice strong sell-off that I was looking for. However, there was no way for me to get into that trade. It just didn't set up properly, and that is, unfortunately, one of the most common things. If you're trading sort of long term and if you're sitting at the charts quite a lot, you're going to find that on a lot of days there's just no trades. There's just no sort of perfect setup that you are looking for. And on those days you just have to sit. Usually what I'll do is I'll sort of set alerts at the key levels that I'm interested in. But for most of the day you're just sitting, you're just watching, you're not really doing anything at all. Okay, so coming into today now, what are we looking at? Well, first thing is the market is pressed up into the 7689 level and we've started to find a little bit of rejection. Now, if we go back to that daily time frame. So yesterday, what I was looking at was this sloping support level, potential price squeeze that we went over in the Sunday analysis. I was looking at it as though we were potentially opening down below this level. And as we started to press higher once again, I was happy to start looking for the rejection coming into the market. And that's what I was looking for yesterday. And that's what I started to see yesterday. But there was no way to actually execute the trade for me. It just didn't line up with the trading plan. So I just had to watch the market doing exactly what I wanted it to do and what I was hoping it was going to do. And I wasn't in the trade. All part of trading. So now what we've done is we have popped back inside this sloping support level and we're testing at this key resistance level, actually almost exactly on the sloping resistance line that I plotted on that Sunday analysis video. Now, I've not been triggered into the trade as yet. It's still pre-market, but this is a very key level of resistance on the FTSE 100. So the first thing is, if it's testing very key resistance, you want to start looking for your sell positions. So the markets came up, it's held at this level at, where are we at? 7:15, and then we've held for about 15-20 minutes, had a little bit of rejection starting to come into the market. And then we got this nice pin bar at 7:35, which I was happy to use as an entry candle. So you can see my entry is sitting just down below. I'm using a slightly larger stop. Usually what I do is I'll put the stop relatively close to the entry. So I'll sort of set it just up above the entry candle. However, we're coming into the open of the market. So first thing is, at the open of the market, it can be a little bit more volatile. You can see the market sort of bouncing around somewhat. On top of that, we also failed to break down from that sloping support and resistance level yesterday. So I would say I'm a little bit less confident now on this trade because yesterday that breakdown, if it was going to hold, it was a really good area for the sellers to step in as we started pulling back and then to force the market back down again. Now that hasn't happened. So what I want to do is give the market a little bit more room to move. I've also slightly reduced my risk on this trade. I'm only using £35 per point. So yeah, we're going to see how we get on. I'm really looking for, where are we at here? At least 7, preferably 10 points on this trade if it triggers. We haven't quite came down and triggered in as yet. If it triggers, around about 7 to 10 points, hopefully what we see is the market opens and then either a spike up and then the rejection coming in, or we just see the rejection coming in, forcing the market down, and then if the bulls are going to step in, we start to see them coming back in, sort of back down at this sort of key support level at 7671. Sorry, I say key support level, I'm talking about intraday, because I'm always looking on the daily time frame for the sort of overall analysis, and then I'm moving down onto the 5-minute time frame, and the 5-minute time frame gives you the sort of the guidelines for the day-to-day price action, whereas the daily time frame gives you the overall view of what the market is sort of looking like and likely next moves. So 10 to 8, I'm not going to do anything. I may not even post this video. I may just be talking to myself if this trade doesn't trigger. If it just starts breaking higher and I cancel the trade, this video will all be for nothing. But I'm hoping it's going to break down. What I'm going to do is I'm going to pause the video, I'm going to grab a coffee, and we're going to wait and see what happens on the FTSE. 10 minutes from the open, if it triggers back in, if the market starts to make movements, I will turn the video back on and we'll have a look at exactly what the market's doing, and I'll talk you through what I'm looking at. Okay, so I have now been triggered into the trade. We are pre-market, so the spread is larger. So I'm sitting at -2 points. Now, the danger is there that the market is just going to find support at these two pre-market swings and then put in another strong bullish bounce. And that is a possibility. The market has put in a strong rally yesterday and also pre-market today. However, what I'm looking at is, well, first of all, the price pattern that I identified on that Sunday video that we've been looking at for sort of a couple of weeks, few weeks with subscribers. Very key resistance up here. We've been following this sloping support. Now, we did break back up above this sloping support level. However, you can see how many rejections we've had up here. Multiple rejections. You can see the previous support levels up here. So as the market broke up, I was just kind of looking for some sort of holding price action. And the fact that we are overextended in that the market has continued to rally in overnight trading is just sort of giving me a little bit more confidence to get into this trade. Now, there's the potential that you've had the rally and the market is just going to open and then continue rocketing higher. It's just, you know, it's part of trading. But when you have your sort of analysis on a trade and you've got enough things fitting that is sort of, it works in your mind and you're able to accept the risk, then you have to take the trade. If you only try and avoid losses as a trader, all that's going to happen, well, you can avoid losses 100%. You can not trade at all. But trading comes down to, unfortunately, risk and probabilities. You have to be willing to risk money as a trader. It sounds really obvious, but a lot of people, they don't grasp that fact, and they get into this really sort of constricted mode where they don't want to do anything. And then what happens is, you know, a couple of weeks go past and they'll say, I'm not doing anything, I need to start taking trades. And then they take a couple of trades and they're poor trades, and it starts to sort of snowball into this emotional trading. And then they'll start again because they've had this emotional trading. They'll go back into this constricted mode and they won't do anything. And then a couple of weeks will pass and they'll start the process all over again. If you want to be a trader, you have to accept that you're going to have losses. The way I always explain it is it's just like any other business. If you run a shop, an online store, whatever it is, you can have lots of sales in a row. And that would be winning trades, you know, lots of winning trades in a row. I just want to be a little bit careful coming up to the open. Lot of winning trades in a row, but eventually the losses are going to come. And just like any business, you are basically paying your bills. So if you own a shop, you're paying your electric, you're paying your staff, you're paying your any tax bills that you've got. As a trader, your bills are the losses. So you can have all this income, but the way you need to look at it is that's not your net profit. Your net profit comes after the losses and after it sort of evens out at the end of the month or at the end of the quarter. It's just part of trading. It's very difficult to get used to. And I won't say it becomes easy because sometimes losses still hang with me for a good day, 2 days, especially if I have them on a Friday. If I have them on a Friday, you take it into the weekends. And that's why you have to make sure when you take trades, you're happy with the entry, because if the loss comes and you're not happy with your entry, then you've got a reason to beat yourself up, and it can start to last a lot longer. It's a really strange business, but it's a really enjoyable business. Okay, so the market is open. Let's have a look and see what we do. I'm just getting ready in case we break down. Let me open the trade quite quickly. Okay, so this is pretty much what I wanted to see, but it's now, where are we going to find support? If we find support down here, there is the real potential that then the bulls will step in and the market will fire back up in a relatively strong way. As I've mentioned, 7 to 10 points, I would prefer toward the 10 points because I'm using reduced risk. And you know, to sort of make it worth the trade, if I get to 10 points, it's 1-to-1 risk to reward. I'm only risking £350 on this one rather than the £500. But we'll see. We'll see if this market can break down. Okay, so what you can see, first of all, relatively choppy, right? Coming into the open of markets, you very often see this. And that's why, let me close this, it can make it a little bit more difficult to trade, because usually a move like this would come over a couple of candles, and you know, you've got the time to analyze the market and sort of decide what it is you're looking to do. Okay, so we're coming down, we're at 10 points, 10.5 points. Okay, so trade closed, just over £350 on that trade. Now I'm sort of looking at it and thinking I should have used full risk, but coming into that trade, I already had the analysis, I'd already made the decision, so I am happy with the outcome. Now, what I want to go over also, so it's now what, 8:01 AM, pretty much finished for the day. I'm not going to go back into the market and try and trade again. That'll be the end of the day. What people don't understand is that it's very easy to watch this video. What are we, maybe 11, 12 minutes. It's very easy to watch this video and to see that profit coming quickly. And then to start to think, if I become a good trader, I can just come into the market and bang, 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 I can make all this money. And unfortunately, that's the kind of sort of image that gets pushed with trading. What you need to understand is it's now Tuesday. This is the first trade. I had yesterday sitting doing absolutely nothing. And sometimes I'll have 2 days like that. Now some days, you know, you come in and it's Monday, Tuesday, Wednesday, Thursday, Friday. 1 trade, 2 trades, boom, 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 boom. And you just make huge profits. But you have to also realize there's those days where there's nothing happening. And then there's those days where I come in and it's 2 minutes past 8 and I've had a loss. And then you've got to sort of build the loss back up and then get it above into the profit again. You don't want to approach trading thinking it's easy. I hate that image of trading. You have to be sort of aware that it's very difficult. This market looks like it may be going to break down a little bit further. But I'm still happy with the profit target. But the reason that I didn't want to hold it for longer is because yesterday we popped back up above that sloping support level. But what we may now see is just the market crashing down. We'll wait and see what happens. But yeah, I try and promote, I would say not safe trading, but I try and promote realistic trading. I try and promote, you have to understand that when if you become a professional trader, you're going to be looking at 3% gains a month to sort of maximum 8% gains per month on average. You know, you'll have months where you do better, you'll have months where you do less well, but on average 3% to 8%, and 8% is, you're really, really going some if you're doing that on average. Yeah, okay, so that's pretty much everything for this video. As always, I hope you found that helpful. Hope you're all having a good trading week. I'm James Orr, and thank you. I just want to quickly add to this video. I've just realized that when I was recording, I wasn't recording the entire screen. Now I do that because every day I make videos for subscribers, but the problem is if I don't record the entire screen for the live trades, I get people coming on saying it was a demo account. So this is the full screen. We can see with live at the top with the City Index account. And there we have the trade from the live video right here. And then down below, we've also got that screenshot, which I actually just took this morning after this 8 AM pin bar right here.